difficult. Let me help you. Is good, my people. Da, da, da. What's good, guys? My few economy cap. Right here. Should never be on the ground. Put that on. Always makes me look better. See? From a 10 to an 11. Okay, guys, we get started soon. We just give everyone a chance to hop on the call. We get going. Okie dokie. Come on. Awesome. Nice one, Adam. Two more minutes, guys. We get started. Actually, what pairs do you guys want me to go over for the week? Also, as well as that, guys, for anyone in the group, I'm working on some new lessons for the course, updating some older lessons because I feel like they're a bit outdated, or I didn't go so much in depth because they are like a year old. So new lessons coming out for that. Literally two lessons being uploaded today. It's going to be like a few uploaded every single week, going to be adding even more to it. So it's going to be a thing where like the smart money course is going to be updated consistently throughout the rest of the year. So yeah, it's going to be absolutely unbelievable. So make sure you're tuned in for that, because I will let you guys know every time we have a new lesson uploaded. And even if you know, even if you already watched the old lesson, watch the new lesson, because I can guarantee you it's like 3 times better than the older one. All right, so let's get started now, guys. Don't want to waste too much time. So I'd like to welcome everyone that hopped on today's session. Today I'm going to be going over, as you all know, the usual forecast of where I believe the market is going to be heading for the rest of the week. Now let's recap what last week did. Pretty much exactly what we wanted it to do. Okay. Now let's take a look right here. So from last week we had this gap, imbalance. Sorry. So we had this imbalance. Price came down, filled this imbalance. Then we had this area right here. So demand zone right here. We wanted price to play down into this institutional candlestick, and I wanted the price to move up from here. We clearly got a very nice reaction. Price literally wicked into this area, and then bullish engulfing candles started occurring. So this huge bullish momentum started coming into the market, and then yeah, we reached this kind of continuation right here. Okay, so on lower time frame, this right here would have been a supply. Okay, so supply zone. Price came, touched into it, and then started reacting. All this was, though, was a simple pullback. Okay, simple pullback, retracement back down into here, and then away it goes. We make a new higher high, and we eventually break structure. Okay, so I was looking for this high to break right here, and then this is new structure form. So now we're looking for higher highs, higher lows, higher highs. Okay, so we break that, and now we reach the second area of supply right here, and you can see you have this institutional candle. Okay, so I was expecting some sort of reaction from here realistically. So you can see price distributed from this level right here, pumped down, fill in the imbalances that we had right here, touched off this demand, reacted, and now we reached this supply. I don't think this will hold. Yes, it gave us a reaction, but I don't believe this area will hold. So the fact is we just made a simple move down. Okay, retraced down, just a pullback from this trading range, kind of reacted from here, but all this was a simple, in fact, lower high created. Okay, so you can see we have lower low, lower high, and then another lower low. So what can we expect? Another push up here, down. But honestly, I believe that we're still pretty bullish on the DXY. Okay, so I feel like for Monday we get one more push down into this zone. Okay, I don't know if we have like a higher time frame point of interest here or something. Let's see if the daily is saying anything. The weekly, yeah, the weekly was actually pretty indecisive last week. So last week was pretty difficult to trade. It was pretty indecisive. In a lot of these pairs, you're trading a simple range, specifically gold, etc. What I am looking for probably is, though, probably one more touch on the 50% of this institutional candlestick. Okay, so one more push down, maybe even like a purge on this low. Okay, clear this low right here, and another push up. But overall, I'm still looking for bullish price action on the DXY, because we have multiple highs right here that I would like to eventually clear. And overall, market structure wise, we are still pretty bullish. Okay, and we also have one more high that I eventually want to get cleared, and higher time frame targets, imbalance, big imbalance that we have right here on the weekly time frame. You see, so that's what I'm looking for on the DXY. With that being said, now I can take a look at what I'm looking at on GBP USD, Euro USD, and all these other US dollar pairs. Okay. So GBP USD, as you can see, we are ranging here for quite a while. We draw this high, we draw below this low, and we were just ranging in the constraints of this consolidation. We were touching the low right here and reacting, touching the high right here, reacting, vice versa. Okay, kept reacting and ranging in this. We jump down to the lower time frame right here, and you can see that it's kind of clearer. Now overall, we're bearish. We've broken structure right here. Okay, we've cleared this low. Okay, you see we're from range to range right here. We're taking our trend. Okay, our biggest trend range, and we're marking out the high, we're marking out the low. A break of structure, because this is a fairly decisive trend range right here, so anything here is going to be decisive, meaning that if we had a break of structure through this high, we were looking for bullish price action, because that was multiple confirmations there. The confirmation would have been failure to make a lower low right here, so we failed to make a lower low. Okay, here we had a break of structure on the 4 hour. A break of structure on like the daily right here would have definitely validated the bullish structure for me. The fact that we still didn't get that, oops. Okay, the fact that we still didn't get that, and we got a reaction from right up here. Okay, I'm not sure if we had some sort of institutional candlestick. I didn't actually take any sells from this area. See, okay, we reacted from this one right here. Okay, you see that? My bad. So this institutional candlestick reacted from it, and then away it goes. We drop. We break this structure. Okay, so we break this low. First confirmation. So this is 8 hour break of structure that we get right here. Retracement back up, retest it, another drop. Once we got this major low broken right here, daily low, by the way. Okay, this one. Was it this one? Yeah, it was this one. Yeah, daily low. We broke below it. Now I'm looking for more downward movement. So I'm looking for another leg down. Okay, so this was fast. This was a massive bearish momentum in here, meaning that there was a lot of inefficiency in the market. Very clearly evident by this massive imbalance that we had right here. Okay, so what I would be looking for is one more push up, one more leg up on the lower time frame on the 1 hour, one more leg up. A simple reaction from the demands in here. Okay, so a smaller institutional candlestick, probably like the 2 hour institutional candlestick. That would be a nice buy. One last buy into the daily institutional candlestick. So one more push down, up, one more up here, targeting this 4 hour institutional candlestick. You see it right here. This one right here. And I would look to sell from this area. After that, once we reach this area, what do we have? Multiple confirmations. Once we reach this area, I can look for more selling. Okay, so what I would expect is for tomorrow to push up to here, maybe like Tuesday, give it to reach here and then down. Now what I could do is simply just come up to the open of the daily. That's another area where we would look for. This in fact could be a stronger area to sell from because it's a higher time from IC. So potentially I'd looked at the daily instead of the 4 hour. Or you can like split your trade into two, 50% of your initial risk here and then the other here. Okay, so in that scenario, you wouldn't miss you would miss the trade if it actually doesn't come up to the 4 hour open. Okay, but yeah, that would be it. One push up, clear this high, clear the liquidity above this high, fill in all the imbalances that we had. We do have a small imbalance right here, so this will be maybe potentially another reason for us to come up into this level. Okay, before the push down, we can also take our fib from the high to the low. Okay, and you see our 4 hour lines up perfectly with the open of the 88.6. Okay, the 88.6 lines up to open of the 4 hour. So pretty should be pretty confident that actually does maybe potentially come up to the 4 hour instead, and it comes up here and then drops. But we will see. Multiple downtrend targets. Okay, so inefficient price action, multiple lows. Okay, liquidity sitting below these areas that I eventually want to see get cleared. But I will go deeper into this much more during our Tuesday Zoom session instead, because this is just a forecast, so cannot tell where the market is going to go. Usually a Monday is going to be just to start the Monday, the trap day is going to be a very nice indication of where I'm going to be for the rest of the week. Monday usually actually tells me where I'm going to end up going for the rest of the week. But the forecasts are pretty accurate so far. In the past year that I've been doing them, pretty much most higher time frame biases are pretty much playing out. As long as you have that basic understanding of market structure, you're pretty much good to go. Okay, but this is what I'm looking at. It could potentially change in the first 2 days of the week, so I definitely will discuss and take a relook at this, and I will just keep this set up, and we'll see what the market does in the next 2 days. All right. GJ not going to go over because it's going to be pretty similar to what I'm looking at on GU. Okay. Euro USD, similar analysis on Euro USD. So let's take a look at the daily time frame. Okay. So actually, this is interesting because remember, guys, the weekly imbalance that I've been calling out for quite a while right now, from this to this. Okay, price has finally touched the 50% of the imbalance, meaning that we could potentially get a reaction next week. We could be seeing maybe a higher price, okay, up into 50% here, and then another sell-off, because it is oversold right here. Okay, you need some sort of pullback right here, okay, from this range to this range, all selling this whole past week. So I'm expecting some bullishness, maybe to the start of the week if we get a fairly volatile week. Could bullishness at the start of the week and then end it bearish, or all next week could just be a big bullish candle to fill here. I don't really see more bearishness to the downside. You could get it, but even the indecision candle that you have right here, this is an indecisive candle because you have fairly small body, 2 large wicks. So if you jump onto lower time frame, we'll show you that you're basically very indecisive that week, which we were. Okay, pretty indecisive right here, and then you were indecisive right here, meaning that you weren't really going up, you weren't really going down, just 2 ranges that we are trading right here. Okay, and the momentum slowing down compared to here, the fact that the lower lows, the range of the lower lows is getting smaller each time. Okay, smaller each time. See, it's getting smaller each time compared to what we were having up here. Okay, shows that potentially we could now get passive buyers coming into the market, and this is evident right here. Look, you see it right here. Price touches off approaching the imbalance. You get push up, you get that break right here. Okay, one more push down, clear of liquidity, and then once again another push up. Okay, so some sort of accumulation that could be occurring right here. Maybe one more thing you could notice is just like one last push down, get a spring down, and then eventually look for a break structure up. Okay, and then you just wait for retrace back down, snipe an institutional kind of setup, and look for up, fill in this imbalance that we were calling out, and then look to sell to the downside once again. All right. What's your entry confirmation setup once it reaches those order blocks? Okay, so when it comes to my entry, it depends. It really depends on the market, especially the momentum. So there's 2 different type of entries you can get into. You can get in straight from a point of interest. Okay, just aggressive entry. Once price reaches the institutional candle or the order block, whatever you want to call it, you just enter. There's pros and cons to this. Or you can have the other setup where you're simply waiting for that institutional candlestick to trigger. Then you go down to a lower time frame play and you start seeing confirmations occurring. So like lower time frame break of structure, or some sort of distribution occurring if you look to sell, distribution occurring, bearish engulfing candles if you're looking for like scenario number 1 setups. So that is one type. Okay, or you could have the aggressive entry where you're just simply wait for the point of interest to reach and you're just sniping straight away. Okay, both have pros and cons, and both depends on the market condition. So for example, if market was very like strong bullish momentum to the upside and the cans were not getting any smaller, it wasn't showing any sign of reversal, I wouldn't just blindly enter based off a point of interest. I want to see some sort of reaction from here. Okay, something cooking up right here before I would look to sell down. Whereas if price was just healthily climbing up here, healthy price action, slowly reaching my point of interest, then for me, I potentially could just get straight into the trade. So it really depends at the time of the setup really playing out. There's multiple confirmations on that. But I am coming out with a lesson on this. So very, very good question, because I was literally thinking of making a lesson on this very, very soon. So I will come out with a very, very detailed lesson on when to do which one, basically. Okay. If you haven't already as well, guys, please drop a like on the stream. It would be really, really appreciated. And yeah, let's keep going. Your JPY, let's take a look at it then. I haven't looked at it last week at all, but yeah. Okay, remember last week we marked out this area of imbalance. This was the same markup from last week, still there. Okay, so you have it right there on the 2 hour imbalance. Okay, price played up. Okay, made a lower low. That's clear. We made a high right here. That was a pullback up from this trade range. Okay, that was a pullback. 50% of that trade range pulled back, dropped one more. But we reacted. This was so many wicks right here, so it acted as support really. You can see right here, demand. Pushed one more time. 50%. Now we fill in that imbalance. So we actually truly fill in the imbalance. 50% of the imbalance, and then push down. Okay, push down, clear the liquidity right here. But if you take a look overall structure on the higher time frame, we're still ranging. Okay, we're ranging. But we have reached the bottom of the range. So when you reach the bottom of the range, now you're looking for buys. You're expecting buys. Okay. So in this scenario right here, as we started approaching the bottom of this trading range, and we take a look at this range to this range, as we started approaching the bottom of this range, and we started approaching these the discounted levels of the fib, 71 reaction, 78.6 reaction. And you see the lows were getting, the distance between the lower lows was very, very small. So this right here acted as just a simple liquidity purge and then a push up, break of structure. So this is why it would be very dangerous to start selling anywhere below 50% of the leg. Okay, if I was looking to sell, I would sell above the 50%. Okay, it sells all up here. Once I start reaching down here, I'm avoiding the sells. In fact, now I'm switching my bias and I'm looking to buy relative to this trend range. So in this scenario, it was actually a good setup. You could have bought from here. This institutional candlestick. You see it? Last down candle for the big up move. This is the momentum move that you had right here. The big move after the last area where they sold. See? Then we had the low right here. The liquidity sitting below right here. So price came down. Purged that low. Touched off the 50% of the institutional candlestick where most volume is. That's where you're looking to enter. Open at 50%. And then price buys up from this area. We fill in the imbalances. Remember, what's fast doesn't last. This was fast movement, so you could expect that price was going to shoot straight up from here and fill in this area. But price was healthy. Okay, slowly going up, slowly filling this inefficient price action, making this levels. Okay, these levels now pretty efficient. Then we break the structure. Okay, small bit of inefficient price action that we had right here. Look, and price fills that inefficiency. Okay, comes down. Fills it in. Look, absolutely 50%. Okay. And then away it goes. Now breaks this high. And now what we can aim for is up here. Note because we are not we don't have a clear directional bias on your JPY right now, and we're ranging. Now I'm being careful. I'm not looking for buys anymore because now I'm switching from looking at this trade range to this trade range relative to this. So what I'm doing is I'm flipping it. Now I'm going from high to low. And now as I approach these zones right here, because I'm in a range, I'm expecting another push down from here. Okay, because that's what's been doing for the past month nearly. Even more than a month. 2 months, I don't know. But that's what it's been doing. So that's my expectation. But it is a bit lower probably because there's a good amount of liquidity above here. So you could get that cleared. But if we're just going probability wise, this is what you expect next. Is now when we reach these areas, 71, 78.6, 88.6. Now we could potentially be getting pushes down. So now we have the 4 hour IC. This is where I'd look to sell next. 4 hour IC lands up to 78.6 fib. Selling off the open. Okay, and the pending. So in this type of setup, this is where you're waiting for confirmation to occur before you're selling. You're not just selling straight off the point of interest. Okay, because there's so many indecision. Just incision right here. You don't know if it's going to go up here, clear here, or clear here. So you're waiting for confirmation to prove, yes, maybe there's one more leg down before another push up. That you wait for confirmation in a lower time frame before you enter this. Whereas if it was clearly identified, the structure was clearly identifiable, then yeah, if it was clearly bearish, I was making lower lows, pulling back, lower high, lower low, then I would just execute straight from the point of interest. So that's what I'm looking at right here for next week. Comes to USD JPY. Okay, so we've clearly finally breaking out of that range. The past few weeks, USD JPY has actually been flying. Yeah, absolutely flying. JPY is pretty weak. USD is strong in the past few weeks. So cleared these highs, cleared this high, and yeah, so we are clearly approaching this that I marked out a good while back as well. So if you go back on the lives, you'll see all these areas I've marked out, because realistically the daily is not changing much. So like for the example here, I'll probably be targeting this for still the next few months to come. The next few months to come. The target won't change. So once you have higher time for liquidity, it's gonna always be there unless it's cleared. You know what I mean? So for now, yeah, targeting these highs. Overall, what I wait for is like a retracement back down to this institutional candlestick, and then look to buy. Continue my buys. I have no reason to sell right here. No point of interest for sells. Just simple liquidity to the left. So yeah, that's just a quick forecast there on UJ. Thank you so much. No worries, man. Gold. NFP played out absolutely to the T last week. If you remember, guys, what do I always say for NFP? Especially you guys in the group, because I gave you my predictions on NFP. You can confirm it. If you're in the group, you can confirm it. I told you guys I'm expecting DXY to be weak. Okay? And it did exactly just that. Now remember though, with NFP, it makes two moves, the fake move and the real move. Look, the fake move clears the liquidity, which is what it did. The big move up here first. So this is manipulating people on both sides are trying to buy and sell. Clear the liquidity, clear the high, and then drop. This was expected. A lot of people are going crazy. Why the hell is this happening? This was very expected. In fact, on the daily time frame, I wanted price to come up here. I wanted to actually come to here. It didn't, but I was expecting price anyways to breach this high. Okay, a lot of people actually called me out on that, saying that nah, just gold is so bearish, not going to clear that high. We were ready for the drop down. Every single move that we had here, people were just like ready to short their whole account. No, the fact that we were just consolidating, people have to look at the higher time frame perspective. Consolidation, you need a break. Once we get that break, this is a manipulation. Now that I know that my CMT has been confirmed, consolidation, manipulation upside, what can we expect? Trend down. Simple. Okay, it's very simple. You have the lows right here, liquidity. You have imbalances down here. Okay, so it's very, very simple. So now what you can look for is a 30-minute sell. Retrace one more time back up, because what's fast doesn't last. Inefficiencies that we have right here. I can retrace one more time back up here, touch the last up candle before the down move, and then sell off. Sell off to where? The multiple areas of liquidity that we have right here. All these relatively equal lows and this swing low right here. Okay, and now we have a double bottom. This is long-term target. I do still believe that price could potentially, price will definitely clear this low. Okay, I'm pretty confident that will clear this low. And probably next week too. Last week was ranging. What we can expect next week is to be trending, because that's how the market works. You'll see it all the time. The market will range, trend, range, trend. Okay, range, trend, and then range, trend, and then range, trend up, and then we should see a trend down. So you see it all the time. See, before each big move, you get a range. See that ranging here, and then big move. Once again, we go up to this move right here. See a ranging, and then big move. That's a simple market cycle. Okay, so you've seen this occur. So this is what you can expect now. Big move. So that's my advice on gold. But as I said, I will keep you guys updated. I will be posting a lot of analysis in the mentors trade idea along with Lennox's with Lennox, the Brad. So keep an eye out on that channel, guys. Set your notification for that channel, because we'll be sending a lot out, especially next week, because I believe there should be a lot of movement happening next week, because last week was pretty ranging. A lot of people tried to trade it. Some weeks you're just not going to be able to trade, because there are ranger weeks. As I said, you know. But next week should be pretty good because we should be starting seeing some trends. Whoa, what happened there? What happened there on Bitcoin? Okay, is it a coincidence that price traded like I didn't even mean to look at this right now, but is it a coincidence that price traded down to here? Like, you know what I mean? Why did it come here? What's the idea behind it? That's a big 1 minute candle. What's the idea behind this though? Imbalances. Okay. What's fast doesn't last. Boom. Here. Now what do we have right here? Let's break this section down. 30 minute. Consolidation. Manipulation. Trend. Institutional candle will usually be in the trend. Institutional candle. Look at this. 3 consecutive candles. Making up my institutional candle. Stick. There's a high probability that this was institutional sponsorship. We play down here. We touch off it. And away it goes. This is like, it's not rocket science. But at the same time, it's clearly obvious. Okay? It's so obvious. Look at that. And now we can look for 60k, guys. 60k next week. Let's see what happens. That's my belief. 60k. I know a lot of people were calling 20k when we were hitting here and here. These are all just liquidity clearance accumulations, okay? So, yeah, I've been pretty accurate with Bitcoin so far. I'm not like perma bull or anything. I'm just following structure clearly, looking at all the different accumulations that we're getting, distributions, our points of interest, etc. And obviously it's fundamentally backed as well, because like when you reach a certain area, like an all-time high, there's no liquidity to target or anything like that. There's no point of interest to target on the left. So after that, as I said though, like it's a thing for me. I don't really trade it, just I hold, buy and hold. You just have to have a belief in it, you know. But yeah, that's nice there. Any other questions, guys? Any other pairs that you guys want me to go over? As well as that, guys, I announced it into this group already, but I want to announce it again. You're able to now book one-on-one sessions with each of us 3 mentors. You go onto the website, lifetime members, get it absolutely for free once a month. You enter that code and you can book a one-on-one session with us, 30 minutes, 1 hour, whatever it is, and you can discuss whatever you want to go through it. If you're a monthly member though, there is a small fee, but that's at the end of the day, like you're paying for the time of the mentor. It's not going to like us, it's not going to the company or anything like that. It's just going to the mentor individually for their own time. But yeah, if though you are a lifetime member, you're getting that for free. It's part of the package. So yeah, there's that. As well as that, guys, I want to drop down this 50% code off because now we've actually officially completed all our technical features and advancements and developments and all that. So we've finally completed it. So I want to drop this code for you guys to actually check out our new app. Check out all the new things that we are coming out with. I like the teachings of Lennox, our new mentor, going very, very deep into Wyckoff and all this. So yeah, I want to give this code out here, guys. So make sure you go ahead, check us out for next week, because I can guarantee you will not be disappointed with all the things that we are working on. There's so much we're working on behind the scene, and as you guys know, every single week we're coming out with new surprises. So don't rule us out. Your GBP for sure. That'll be the last one I'll go over because I am dying right now. I need water, and I finished my water bottle. Just a second, guys. I want to make sure that discount code is correct because I don't want to be giving out wrong discount codes. So that discount code is in fact incorrect. Let me fix that for you guys real quick. Okay, so let me send that in real quick. So it's actually not 50 off, guys. It was 150 off. My bad, guys. Just had to make sure. Wait for you guys. Okay, so I updated that. Apologies. Yeah, so I updated that code. So make sure at the end of the day, guys, it's gonna be 25 euro for the month. Realistically, for me, I don't really even care about that amount. All that is gonna cover is like management costs and like paying out like all our employees that are like doing management behind the scenes and all that stuff. But when it comes to it, the main reason why I'm pushing out like these discount codes and stuff like that is to actually give people a chance, to take that jump, especially if you think you can't afford our higher packages and all of that. Show you like this is in fact indeed worth it, because what we're showing you is like genuine value that we're dropping, and you guys can see like from the stuff that we're just literally giving out for free. You can only imagine what we're giving out in the premium. Okay, so but as I said, for me, like I'm not really stressed about marketing like crazy, but you're not gonna miss out anything by checking it out, especially with a code like this. So okay, my bad. I got sidetracked. So your GBP. If we are bearish on GBSD, we should be bullish on your GBP. Okay, that's where my correlations come into play. Now, what do I start looking at? I start looking at my area right here. I start looking at point of interest that we potentially could have right here. Let's see if I can have a clear area that we could potentially buy from. 12 hour. 12 hour IC. We got a reaction, by the way. Touches it and it goes. Now, let's break it down. Go into the lower time frame. Now we're consolidating, okay? We're basically just like accumulating around this level. Multiple lows right here. So 3 lows. Okay, 3 wicks that we have down here. Okay. So, and the lows that we have right here. What can I expect? For next week, what I would like to see is a push up, touch off the institutional candle, down, clear liquidity, and then up. That is what you want. That is what you would want to see. Okay, I would like to see a break of structure here. Definitely a break of structure. Once I get that confirmation, I'm looking for buys. Okay, our first confo is that we failed to make a new lower low. Okay, first confirmation, failed to break this low. Second one is we're breaking up above here. Now we didn't actually get a candle close, so that's actually not a break. So my bad. But we should get a break up over here. That's the second confirmation. Third confirmation will be the break on this initial trend, which is this one, this high. Once we get that, I will start looking for buys. Then for now, there's too many lows right here that I have. Too much relatively equal lows right here. So I want to see liquidity getting cleared one more time. One more aggressive push down and then up. Okay. That doesn't mean that price could just come down, react off this 2 hour and just go up. But that would be the ideal scenario right here. But I will wait and see. We do have an institutional candlestick right here. So if you do get that, you could potentially sell to here, to the liquidity, and then just get out. Don't hold it too long. But we will see. With your GBP, I don't really trade it that much, so I'm not very keen on the pair or anything like that. But time will tell. As always, analysis can change, so make sure that you are being careful, and yeah, just always make sure you're staying active with the markets. With that being said, guys, I seen the message there about where the code is. This is the code, so my bad. There you go. So this is the code. So feel free to use it, and yeah, thank you guys so much for hopping on this session, and I'll make sure to catch you guys on the next one next week. Have a good success.